following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Good afternoon. Thank you for joining us for the Exchange Update on a day when I'm sure the pool would be a preferred spot. My name is David Gray, and I'm a Vice President at the Chicago Board Options Exchange. And since CBOE is the lead exchange this year, I'm the first to welcome all of you here to lovely Las Vegas and to the 31st, believe it or not, Annual Options Industry Conference as we celebrate 40 years of listed options. It's certainly a very special anniversary week for all of us. I've been told that as long as I'm up here, I might as well be the first exchange rep to give an update. And then, unlike in years past, I'll draw from a hat over here to determine the next speaker. I feel a little bit like the first contestant on the finals of American Idol. By the 10th time a contestant comes up here and sings, the first contestant is long gone. If that's the case, I'll be chatting with a lot of you again during the course of the conference, and I look forward to that. Today, I'll highlight a few avenues of growth that we see for CBOE going forward. First is the overall evolutionary opportunity. Given the size of the options industry relative to more mature markets. Second is the buy-side opportunity. Third, the OTC opportunity. And fourth, our ability to expand globally. First of all, overall secular growth. It cuts across all of CBOE's product lines, from the equity options that we've traded for many years to products like VIX options, which are still at the early stages of development. Two mainstays of CBOE, product innovation and customer education, have been the primary engines of overall industry growth and will continue to drive and shape it going forward. We're keenly focused, of course, on continuing to develop exclusive products, including our S&P 500 Index Options Complex and our volatility product lines. Each of the products we offer in our S&P 500 complex, including, of course, SPX, SPX Weeklies, XSP, which is our 1/10 the value index, and SPX PM, give customers a unique way to trade options on the S&P 500. We've seen what we thought held potential for SPX Weeklies come to fruition, as Weeklies have become one of our fastest growing products, up nearly 70% in 2012 over 2011's record performance. That pace has accelerated. And for the first quarter of this year, trading in SPX Weeklies is up more than 223% over the same period in 2012. We've made some changes in SPX PM, too. On February 19th, we moved SPX PM from our C2 platform, our all-electronic environment, to CBOE's hybrid model, which we feel exposes it to a broader base of likely users, including our very active SPX liquidity providers located, of course, on the CBOE trading floor. This migration also unites all of our S&P 500 products on a single platform, making it more straightforward to access our entire SPX product line and easier to execute spreads between these products. So far, we've been pleased with the increase in SPX PM volume in this new environment. The big news in March for us was our announcement with S&P and Dow Jones indices on our licensing agreement. An amendment to that agreement extended CBOE's exclusive rights to list security options contracts based on certain indices calculated and published by S&P through 2032, with the non-exclusive rights through 2033. Volatility. Volatility trading continues to grow strong. The fastest growing segment of our business, in fact. Volatility trading is only 9 years old. The growth trajectory of VIX options and futures was made more remarkable in 2012 against the backdrop of, as we all know, historically low volatility and low trading volumes throughout the world's markets. Average daily volume in VIX rose 14% in 2012, which was the sixth consecutive year of record growth. For futures customers, VIX futures average daily volume rose almost 100%. That momentum has carried over into 2013, with VIX options up nearly 50% in the first quarter of this year alone, and VIX futures up over 130%. Expanding the user base for VIX. Of particular significance to us is the fact that growth in VIX trading is now being driven by a broader user base. Historically, growth in VIX options and futures mirrored the growth in exchange-traded products tied to VIX. While ETPs continue to be meaningful drivers of volume for us, our customer research confirms significant growth in both the number and types of participants using VIX products. Specifically, we now see increased activity among proprietary trading firms, hedge funds, CTAs, pension funds, endowments, and registered investment advisors. We believe this wave of new users is only beginning to gain strength, with many more to follow. Investor education. Growing VIX trading beyond a core group of early users has required an ongoing commitment of our staff and VIX liquidity providers to educate the marketplace, sometimes one investor at a time. In March, we held our 29th annual Risk Management Conference in the United States, strongly focused on our VIX and SPX products, with about 300 institutional users or potential users of exchange-traded derivatives in attendance. We continue to make VIX the centerpiece of our educational efforts to address the needs of a new breed of volatility trader. To that end, earlier this month, we further expanded our social media marketing by launching our CBOEoptionshub.com, a one-step options and volatility forum for active market participants. We know that social media traffic is dominated by active market participants looking for actionable, real-time trading info, so we think that we've answered that need. On the buy side, the institutional buy side opportunity. This is the sweet spot for CBOE. Given our ability to respond to the institutional appetite for index vehicles and yield enhancement with our index products, we continue to see more sophisticated index option strategies used by traders at both asset management firms and at hedge fund firms. We're very encouraged by the continued increase in the number of funds that employ CBOE index option strategies, and today more than 70 open and closed-end funds with an estimated $30 billion in assets under management use options benchmark strategies. I'll touch briefly on the OTC opportunity. We've already begun seeing increased trading from OTC participants in SPX Flex options at CBOE. We look forward to seeing what Dodd-Frank, as I'm sure we all do, will bring in terms of OTC business. Recently, we added customized trading technology called CFlex 2.0 to our command system to enable customers to conveniently access Flex options with the same CBOE interface that they use for regular options trading. The international opportunity. And finally, we see an opportunity for CBOE to grow options and volatility overseas. We're still in the early stages of the international growth story, and expect continued demand for U.S. options from European institutional investors given their exposure to U.S. equities. You've probably seen Tab Group's has estimated that 10% of U.S. listed options volume originates from Europe, and its prediction that this figure will increase. With our proprietary products, we actually estimate that at least 15 to 20% of our volume now comes from outside the U.S. Overseas, with overseas investors, SPX enables taking a position in the broader U.S. equity market with a single transaction. And the VIX index, which is viewed as a proxy for world equity market volatility, is driving tremendous interest in VIX options and futures globally. Additionally, plans to expand our VIX customer base include the introduction of a London hub and expanded trading hours for VIX futures. Our hub in England was launched on February 1st, providing our European-based customers with an efficient connection to CBOE's command center located conveniently in my basement in New Jersey. Just seeing if you're listening. Pending regulatory approval, in May and June, respectively, we'll launch the first and second phases of expanded trading hours in VIX futures. The new hours will allow European customers to access a longer trading session in their local time zones and will meet demand from U.S. customers who want expanded trading hours as well. We look forward to our second annual Risk Management Conference in Europe, which will be held in Lisbon in September. We're thrilled that more than 160 participants, including some of Europe's most sophisticated options and volatility practitioners, attended last year's inaugural European event in Ireland. In conclusion, to wrap up, we're energized about the future as we continue to expand and promote usage of our products and benchmarks, as we welcome new types of users to our markets, as we prepare for changes in the OTC marketplace, and as we continue to educate option users in new ways. Thank you very much for your time, and now I'm going to put my glasses on here and draw the name that put that little envelope under my door with, how much money was that? From NYSE Amex Options, Todd Wilemon, Managing Director.
David Gray, everybody. David Gray. Give him one more round of applause. I want to welcome everybody to Las Vegas for NYSE Euronext. My name is Todd Wilemon. I'll be representing both NYSE Amex Options and NYSE Arca Options. Starting off 2013, NYSE Euronext U.S. Options reached a new milestone for us with both NYSE Amex and Arca Option combined. Our equity option market share was 29.4%. And we have our participants to thank, so thank you. Since we were last together in New Orleans, much has happened. If you remember back in New Orleans, I said, the minis are coming, the minis are coming. Well, the minis were launched, and I must say they've been quite successful. We've seen week over week increasing volumes, and we see increasing participation among the participants. February 2013, the TAB Group report, U.S. Options Market Making 2013, Scale, Scope, and Survival, identified NYSE Amex Options as the exchange with the most attractive flow. My understanding is we won the ball gown and swimsuit competition going away. Attractive flow, beauty. Okay, some of y'all will get that later. Thanks, Mike. The natural choice, starting today, April 24th, Russell U.S.-based indexes on options on the Russell U.S. indexes will trade only on a few select exchanges, and those are NYSE Amex and Arca Options are both some of the select exchanges that it will be trading on. So the good news is that Russell 2000 Index, RUT on small caps, will continue trading on NYSE Amex and Arca Options. On the West Coast, NYSE Arca Options goes make-take pricing exchange-wide. Remember, NYSE Arca Options was the first options exchange to go make-take pricing in the options industry, and that was on penny pilot names. We've expanded it to include all names on the ExchangeGo penny pricing. We had a very successful rollout last year of GEMS, Global Execution Management System, to critical acclaim from our users. It's a tool. We improved the tools that people use when they come to our exchange, making it a better place to trade, giving them more tools and better capabilities in the post-trade allocation. Huge critical acclaim there. Our client management tool went live also, and this was another tool to help participants coming into our exchange. The client management tool is an online web tool that allows you to view order status and specific orders. It allows you to see what type of parameters you're using. It'll allow you to cancel orders, also for market makers to be able to look at their parameters that they have involved, and this is all an online tool. Participants are enjoying that immensely. New York NYSE Technologies was recently named the best data center provider to the sell side by Waters Technology, a leading magazine covering both the business and technology issues of both the buy side and the sell side technology brands in their respective markets. More about NYSE Technologies at the end of my spiel. So that's where we were. That's the last year in review. Now, where are we headed? That's why we're all here, right? To hear the skinny on the future. And on that note, if anybody has tomorrow's closing prices, please talk to me after the speech. So where are we headed? The first thing that I'd like to talk about is we are expanding our price improvement auctions to include paired order auctions. The first thing that we're going to have is a single leg price improvement auctions for less than 50 contracts. For 50 or greater, we'll have a facilitation auction, and that's if a firm is facilitating a customer order and they're clearing in the same firm range. And then, of course, we have for 500 or greater, we're going to have a price improvement solicitation auction. And then for all of these auctions and for our current auction suite right now, we are going to have a random auction timer. Currently, right now, we have a set timer. We will be going with a random auction timer. Now, all of these initiatives that I'm talking about, I've gotten in front of myself, are all pending SEC approval. So everything I'm talking about in the future, realize that we're waiting for the SEC to approve. We are going to expand our self-trade prevention, STP. We're going to enhance it by including the interaction between quotes and orders. Just giving you more control over your option trading experience on both Amex and Arca options. We will also introduce a global risk mitigation that will be at the firm level instead of at the stock-specific level. People have requested that. We've heard you. That's coming. Global level risk mitigation. We are also, now this is for all our speed-sensitive people, latency-sensitive people, we are upgrading our common customer gateways to lower latency for orders coming into our exchange. Currently, we just went live on NYSE Arca Equities with our core technology, Global Common Customer Gateway. We have seen latencies for a round trip of an order coming into the Arca Equities Exchange. We've seen the latency round trip be cut in half. So we are really speeding that process up. Very exciting. For our market makers, in our Market Maker Direct, that's our quoting application, we are getting new hardware, upgrading the hardware, and also it's going to be having a Linux operating service, and this is going to lower latency. Speaking of market makers, pending SEC approval, of course, market maker quotes will not be trading versus blind interest. So more choice, more control of how your orders actually interact in the marketplace. Also for market makers, very important in these very quick times of trades taking just 100 microseconds. We are going to have, for our Market Maker Direct, we're going to have series IDs guaranteed unique for 30 days. Just another help in managing your risk. Also, we're introducing a cap per user in our complex order table and our complex order book, which will improve trading for all our users on our complex order book. So we're going to introduce a cap. And then the last thing, just NYSE Arca options specific for open outcry trading on our floor in San Francisco. Yes, we still operate 2 trading floors, one in New York, one in San Francisco. But on Arca out in San Francisco, when you do an open outcry trade and when you have to clear interest in the book, you will only be clearing true customer interest. So that's and all of that is, of course, pending SEC approval. Going to NYSE Technologies. The good news is they're here. Come meet them. They'll be at our booth all the whole conference. But they have they're rolling out BQT, Boy, Queen, Tom, and that stands for NYSE Best Quote in Trade. This is going to help clients seeking alternatives for high market data costs associated with level 1 data. What this is this BQT provides an alternative at a reduced cost. It's less feed, so it's going to help the smaller players in our industry. Come by to the booth, talk to NYSE Technologies. They'd love to explain it more to you, better than I can in the short time I have. And then, of course, they're also introducing a new Options Analytics EU feed. That expands on their own Options Analytics that they rolled out last July. This is going to be 2 phases. One, it's going to offer analytics on indexes using a futures price as the underlying. And then also they're going to be rolling out analytics on European single name equities, and also rolling out analytics for interest rate and commodity futures for options trading for those. And then the last thing, in our social media world, they are partnering with Social Market Analytics to distribute sentiment statistics from Social Market Analytics, patent pending social media monitoring engine through safety. I don't know if this would have helped yesterday with the Twitter and AP imbroglio, but maybe it will. So come on by the booth. See them. Come on by the booth. See all your favorite people from NYSE Euronext, both Amex and Arca options. One last thing while we're here in Vegas, have lots of fun, but be safe. Our next contestant for NASDAQ options market, NASDAQ OMX Philly, Greg Ferrari, Managing Director of U.S. Options and Futures of the NASDAQ OMX. Greg.
Thanks, Todd. Thank you for the opportunity to present the NASDAQ OMX Options 2013 Exchange Updated OIC. My name is Greg Ferrari, and I am part of the NASDAQ OMX Derivatives team focused on our 3 U.S. options markets. That's Philly, NOM, and BX options, as well as our NFX futures market. NASDAQ OMX Transaction Services has been offering options trading to its members for the past 5 years. Upon the launch of NOM in March of 2008 and the subsequent close of the Philly Stock Exchange that summer, the table is set to marry the best-in-class management team alongside the incredibly scalable technology product development solution of the iNet platform. My objective today is not to rehash everything we've accomplished over the past year, but rather to inform you of our role in the community and what we believe to be important as we embrace the new normal in our business. We are market operators by design, and the team at NASDAQ OMX prides itself on running 3 commonly designed, yet uniquely positioned options market models to attract different pools of liquidity to interact in an efficient, transparent manner. NASDAQ OMX value proposition is tested each and every day, and it is our commitment to be the most reliable and dependable trading solution for all market participants. This core principle of operating a best-of-breed, reliable trading system provides a discipline and framework for every new initiative we evaluate and offer to our members. For instance, Tom Whitman and all the options management team aligned all parts of the company to plan, build, and deploy our 3rd options exchange in the U.S., BX options, in an amazing 137-day turnaround. From concept to launch, we put an incredible amount of effort forward to provide the market with an alternative approach to trade equity and ETF options. Firms have come to expect a lot from NASDAQ OMX. Last year in New Orleans, when we stood up here and said that we were going to launch this new market on June 29th, we delivered. And most importantly, you responded in a very meaningful way. We thank you for how you responded. You've demonstrated that the market appreciates innovation and how liquidity providers interact with customers that have marketable order flow. You appreciate a common access point leveraging your existing technology footprint in the Carteret data center, and you appreciate a dependable technology solution. Most importantly, we appreciate your commitment to us. NOM, the NASDAQ option market, is a vibrant marketplace that continues to attract new participant types. In the most recent quarter, NOM had 7.85% of OCC-cleared market share and over 12% of the single-leg market. Through April, NOM has exceeded 9% of OCC-cleared market share and 13% of the single-leg market. In our internal metrics, we look at the health of trading electronically by way of analyzing percentage of industry trade counts, and NOM continues to have an upward trajectory each and every month. We always consider new ways to link our strengths across NOM and the NASDAQ stock market to bring innovative styles and attract new sources of liquidity. The market has responded, and NOM is now a mainstream source of liquidity for all market participants. Last but certainly but not least, Philly is our most robust in terms of functionality that we have out in the marketplace. Between our floor and our single-leg electronic book, our complex order book, and pixel activity, we're able to cast a wide net and attract many different participant types. We recently introduced a new functionality called the Order Exposure Alert that allows market participants to interact with ratable liquidity prior to exiting the Philly environment. In Q2, we have plans to allow firms to submit a pixel cross with up to six option legs, as well as a solicitation mechanism. This functionality is very important flow desks that commit capital to the buy side, as well as the interdealer market. Our most recent endeavor is on the futures side with our plans to enhance our trading system with new features and functionality. NFX, a CFTC-registered DCM, is a strategic asset for NASDAQ OMX's U.S. derivative franchise. Given the vast number of changes in the regulatory environment affecting the OTC market, we are positioning NFX to provide our customers a consistent, scalable trading experience across all asset classes. Moving beyond the match. This is a hallmark tagline within NASDAQ OMX, and we also apply that same discipline within our transaction business line. We are heavily engaged in many different aspects of the trading lifecycle to ensure that the life of the trade starts well before an order or quote enters the market and well after our matching end determines that a buyer and seller can transact. On the pre-trade front, we start with education. As Ben Franklin said, "Tell me and I'll forget, teach me and I'll remember." NASDAQ OMX strongly feels that education is at the forefront of how we engage all investor types. Like our friends at OIC, identifying the different uses of options is essential to helping end users embrace our products, regardless of whether the investor seeks asset protection, has a view of market volatility, or is looking to employ a yield enhancement strategy. In the fall of 2012, we launched a dedicated channel called the Market Street Educational Series. This monthly webinar offering is the cornerstone of our regular outreach to all users of options globally on how we position our proprietary products and the benefits they offer investors. We also recently hosted an event for wealth advisors and RIAs to allow these investment professionals from the Philadelphia area to further embrace the options product set and learn from some of the best and brightest options strategists in the country. With the help of OIC, we are very focused on connecting with people to bring back the investor and instill trust in our asset classes. Product development is also very important to our current business and our future growth strategy. It is an area that we continue to embrace in order for us to compete as more asset classes start trading electronically. In February of 2013, we announced a product development partnership with Bank of New York Mellon, to co-develop and market exchange-traded derivatives on U.S. Treasuries. Our initial product launch with BNY Mellon focused on options tied to specific on-the-run 10-year notes and 30-year bond issued in the quarterly Fed auction. These products have been live on Philly for 2 months now and continue to gain momentum from investors who have exposure to the yield curve and are looking to maximize their view of future rate movements against their specific holdings to manage duration and basis risk. We have a full pipeline of new products across options and futures, and we're very excited about this growth opportunity. Lastly, on the post-trade side, NASDAQ OMX cloud-based regulatory financial storage solution, FinCloud, is another critical piece of the pie to help firms proactively manage their total cost of trading. FinCloud, powered by Amazon Web Service, is a secure cloud computing platform designed exclusively for the financial services sector. FinCloud combines AWS's cloud computing expertise with enhanced security from NASDAQ OMX to provide cost-effective and efficient management and processing of financial data. Cloud computing is one such alternative that can provide firms with greater flexibility, access, and reliability at all decreased costs over traditional computing models. As I've expressed to you this afternoon, there are a lot of interesting things taking place at NASDAQ OMX within our derivative business. Stop by our booth or visit us at the Cabana over the next few days. We'd love to hear from you. Thank you very much. From the OIC, our friend, Al Grigoletto, Vice President, OIC Education.
Hello, and thank you. Before beginning, I'd like to express my sincere appreciation to all of the exchanges and to OCC for their continued support of the Options Industry Council and its mission to bring options education and the benefits and risks of those options to not only investors, financial advisors, institutions, universities, but also to government agencies both here and abroad. I'd like to go through a bulleted point list of some of the accomplishments that we've had in just the past 4 months. So I'm not going to go back a year, but rather just talk about our recent successes. On the international front, we are strengthening ties with China, having recently signed 2 memorandums of understanding with a government bureau and the Shenzhen Stock Exchange. Staff members also presented an OIC overview to the Shanghai Futures Exchange in Chicago. We will send our 4th delegation to China in June. In fact, we have representatives from the Shenzhen Stock Exchange and the Shenzhen Commodity Exchange, so if you happen to come across them, please welcome them to our OIC conference. We've also continued our partnership with Toronto-Montreal Exchange and presented both basic and advanced presentations on their Education Day. Our European outreach included educational events as well in the UK, in Holland, as well as a new outreach to the Middle East. We're bringing education now to Kuwait, Qatar, Dubai, where we also have a content share with the NASDAQ Dubai Derivatives Exchange. We continue to dialogue with Johannesburg, South Africa, where the ISE is considering a move to listing equity options on the underlying. On the collaborative front, we recently partnered with educational events with E-Trade, Option Monster, and we've held collaborative webinars with Scottrade. I'd like to emphasize that any of these services are open to any and all partners. Working with media, we've conducted an option spreading webinar for TheStreet.com, and our OIC speakers are regularly featured on Mark Longo's radio show. We have also commissioned the TAB Group to do a focus study for us later this year on options. We are now preparing our own Wide World of Options radio program, and some of you in the audience are being interviewed while here at the conference. On the institutional front, OIC and NASDAQ presented a 2-hour event at the Market Street Educational Series entitled Protecting Assets and Garnering Yield. This was the 3rd such OIC event born from the OIC Wealth Advisor Summit in New Orleans last year and the Thought Leadership Forum in New York last September the 27th. These institutional events invite leading wealth advisors, pension CIOs, credit union RIAs, and endowment portfolio managers to participate in a forum that has the options practitioners highlight their success and teach non-users how to overcome obstacles in incorporating options into their portfolios. On the government front, OIC conducted a 3-stop Washington educational tour for the staffs of the SEC, the CFTC, and for staff members of Congress, where the attendance hit a 3-year high. Many of you know in this regulatory environment how important it is for us to be in Washington and dialoguing with the regulators. Most recently, we gave our first ever presentation to the staff members of the Federal Reserve Board in Washington, D.C. We're always looking for new audiences. We continue to seek out new targets and audiences for educational outreach. Building upon 2 partnered events where we had 10 RIAs from credit unions come to the CBOE and PHLX last summer, OIC participated in the 2013 Credit Union National Association Government Affairs Conference in Washington, D.C. Many of these credit unions are associated with Fortune 500 companies whose members hold significant concentrated stock positions. They are now receptive to learning the benefits of using covered calls and protective strategies on these concentrated positions. In addition, we did an event out in San Francisco, most recently with Trade PMR, which expands our reach to the Brokerage and Custodial Services Group for Registered Investment Advisors. We're also going back to school. We're often called upon to educate CPAs, CFPs, lawyers, and even law school students. We have just presented a forum to 2nd and 3rd year law students at the SUNY Midtown campus in New York. We were also invited to speak at SII Wharton. We support the Women in Delisted Derivatives program, and we took part in the Quinnipiac Global Asset Management Education Forum. This forum provided an international group of college students and faculty with a unique opportunity to interact with industry leaders and learn best practice in investment management. We continue to produce articles of interest. We recently released the qualitative white paper, Tales from the Front, highlighting how 10 advisors have successfully incorporated options into their practice management. We recently launched the new Greek seminar in response to demand for more advanced education. And all told this year, we have held 19 evening seminars and 1 Investor in Education Day in Costa Mesa, California. But that's not all. We're also involved in social media. OIC social media platforms continue to grow and evolve in 2013. We're showing a significant increase in followers' reach and engagement. OIC ended the first quarter with followers across Twitter, Facebook, StockTwits, LinkedIn, and Google, and we've increased that number 43% over the first quarter of 2012. OIC now reaches user groups in LinkedIn that number 1,200. OIC Friends of Fans page on Facebook was up 60% in the first quarter this year compared to the same time last year, and now boasts a following of 750,000 followers. Traffic to OIC Options Education org was up over 311% compared to the first quarter of 2012. Finally, our website and our help desk registration improved by upwards of 18% on the prior year. The help desk receives over 1,000 calls every month and 800 emails from interested investors. I want you to know that OIC is working very hard to grow the industry in every communicative means and in every continent. We are at your service, and we are thankful for your support. Thank you. Next up, and I'm proud to introduce Joe Corcoran, First VP and Head of Government Relations, OCC, with the Washington, D.C. update.
Thanks, everybody. I'm going to give you an update on the activities of the U.S. Securities Market Coalition. For those of you in the audience that don't know what the Securities Market Coalition is, it's the exchanges and OCC working together on issues of common interest that affect the options industry. And I'm going to give you an update on our activities in Washington. Not surprisingly, the focus of the coalition has been on tax issues, and more specifically, the draft financial products tax reform proposal that was released by Chairman Dave Camp of the House Ways and Means Committee in January of this year. This proposal is one part of his process for comprehensive tax reform, with the ultimate goal of, at least in Chairman Camp's mind, getting down the highest tax rates to 25%. At the end of 2011, Chairman Camp released an international tax reform proposal, and more recently, he released a small business tax reform proposal. Of course, our attention has been on the financial tax reform proposal and the negative effects it would have on the listed options industry. Let me just briefly talk about the proposal. Under the proposal, listed options would be marked to market at year end, and all gain or loss would be treated as ordinary gain or loss, ordinary income or loss, rather than capital gain or loss. In addition, and this is probably the most significant impact of the legislation, a taxpayer that hedges appreciated stock by buying a protective put would be treated as if they had sold the underlying stock position at fair market value. Similarly, a taxpayer holding appreciated stock who sells a covered call on the stock would be treated as having sold the stock. Tax would be due on these phantom gains even though the taxpayer has not actually sold the underlying stock. And this is a point we've made repeatedly when we've met with members of Congress in the Ways and Means Committee as well as their staff. In addition, 60/40 tax treatment for market makers and customers would also be eliminated under the draft Camp proposal. And if that proposal, Chairman Camp's proposal, weren't bad enough, on April 14th of this year, the Obama administration released its budget proposal, and it contained a proposal on the taxation of derivatives that basically mirrors Chairman Camp's draft proposal, and based on the description in the budget, would have the same negative effect on the listed options markets. So what's the coalition been doing in response to these proposals? Let me first start by saying while these proposals have a ways to go before they become law, we view them as serious threats and have been engaging in a proactive legislative strategy to meet the threats head on. This strategy has included meeting with members of the Ways and Means Committee, both Republicans and Democrats, even though the Republicans are in charge, as well as their staffs, to explain the potentially severe negative effects the draft legislation would have on the listed options industry. I, along with other participants of the coalition, have conducted over 25 of these meetings. I think these meetings have been very effective in educating this group about the listed options markets and the industry and the serious negative effects the proposals would have on it. Last week, we brought in representatives from 3 large retail firms to meet with Ways and Means Committee members and their staffs to talk about customers' use of listed options and the threat the legislation poses to that business. On Monday of this week, we submitted a comment letter on the draft proposal to the Ways and Means Committee detailing our concerns about the legislation and arguing that listed options should be completely excluded from the draft legislation. OCC's press person, Jim Bender, and I have met with Washington reporters to describe our concerns with the proposal, so we've been meeting with the press to get the message out. As far as next steps go, the plan at this point is to meet with key Treasury and possibly White House officials on the administration's proposal. We also plan to meet with House leadership and Senate Finance Committee members and staff on the issue. Just for your benefit, the Senate Finance Committee is the committee in the Senate with tax writing authority. The ultimate goal of all these efforts, or asked, so to speak, in Washington speak, I should say, is to exclude listed options from the derivatives covered by the proposals. I just want you to keep a few things in mind, a few key points in mind. The Ways and Means legislation is currently in draft form. We've been told repeatedly by staff working on the legislation that it is intentionally incomplete because they want to solicit the feedback of affected parties. And in fact, throughout the meetings we've had with staff and members, they've been very appreciative of our feedback. Another key point to keep in mind is the Senate Finance Committee Chairman, Max Baucus, has publicly expressed support for comprehensive tax reform, but has not indicated what he would support or oppose, and has not held any hearings on the issue. One thing to note about Chairman Baucus is that he just announced yesterday that he was not going to run for the Senate again. It was looking like he was in a competitive race, and so he decided not to run again, but he still has 2 years left as chairman of the Senate Finance Committee. So there are some folks out there who think that that may give him more of an incentive to pursue comprehensive tax reform since he doesn't have to face the wrath of his voters. And lastly, one overarching point to keep in mind, based on everything we've been able to gather so far, and I'm sure this probably comes as no surprise to you, the Republicans' view of tax reform is different than the Democrats' view. In general, as we understand it, the Republicans' goal is to expand the base and lower rates. And that's what Chairman Camp has said repeatedly. And essentially, that's a revenue-neutral approach. The Democrats generally want to reform the tax code by closing loopholes and retaining or raising certain tax rates, which essentially is a revenue-increasing approach. So far, there's been no meeting of the minds on these approaches. One other thing I wanted to talk about with respect to Washington is just a quick update. This is a hot topic last year, but has kind of is more secondary now that the draft tax legislation is out there. It's an update on proposed IRS regulations. As you may recall, last April, the coalition submitted a comment letter on proposed regulations by the IRS that would impose U.S. withholding tax on certain options transactions entered into by non-U.S. persons, such as offshore hedge funds. Over last summer, we engaged in a proactive meeting campaign with IRS, Treasury, and certain Hill folks to express our concerns about the proposed rules. I think our advocacy efforts have paid off so far. At the end of last summer, the IRS delayed the effective date of the proposed regulations, and as we understand it, is currently reworking the proposal, but has not released it publicly yet. And that is it for my update, so let me select the next speaker. I'm pleased to introduce Patty Schuler from Box. She's the Vice President of Business Development, Sales, and Marketing.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.